What is good? We are back with the final module of the trading den, and in this one we are going to be going over time and price. Now, just like everything, you need a narrative for the draw on liquidity. If you don't have a narrative on the draw on liquidity, you really shouldn't even be worried about time. You always need that narrative. Are we going to go higher? Are we going to go lower? And figure it out from there. So this is indices, Killzones and Macros. I'm not sure if this is the Killzones for Forex and Macros for Forex. If you're trading Forex, just go look it up. I only trade the indices. So the Killzones, all in Eastern time, all this time is Eastern time. The Killzones, if you trade London session, is 2 a.m. to 5 a.m. New York session is 8:30 a.m. to 11 a.m. New York PM is 1:30 to market close, 1:30 p.m. to 4 p.m. And these little 10-minute macros, these tiny 10-minute pockets of time, except the PM ones, these little 10-minute pockets of time will either give an expansion towards the draw on liquidity, or it will accumulate, and when the macro is over, give you a run to the draw on liquidity. So it's either an accumulation macro or an expansion macro. So these macros are from 9:50 to 10:10 a.m., 10:50 a.m. to 11:10 a.m., 11:50 a.m. to 12:10 p.m., 1:10 to 1:40 p.m., and then 3:15 to 3:45 p.m. So let's go into the charts and see what time some moves occur. So here we are on NASDAQ. Right here, I'm going to mark out 8:30, this vertical line to 11. 8:30 to 11. And then 1:30 to 4. Okay, so here we are at 8:30. What do we see here? We see a swing to the downside, pairing orders, and then an expansion. So look at what we did this entire time, just accumulated in this area, until 8:30 opened up. We get a move up, taking this high, swing down, pairing orders, and then an expansion. Now this all happens during 8:30 to 11 a.m., the New York AM kill zone. Now, right here, what do we get? A swing higher, manipulating above this high, and then 1:30 opens up, and then we get that draw to the downside during PM session. So the New York PM session is going to do one of two things. It is either going to be a continuation of the New York AM session, or it is going to be a reversal of the New York AM session. Let's go down to the 5-minute chart and see what time these moves occur. So here we are on the 5-minute chart, right here at 9:50. So right here is 9:50. This is the opening of 9:50. Right here we get this down move. So we actually form an SMT at that low. Let's get rid of that because that looks ugly. An SMT. So now this macro has manipulated lower. And what time do we start to go to the overall draw on liquidity? 9:50 to 10:10 a.m. So this little tiny macro right here starts the move to go to the expansion to the overall draw on liquidity. So this little pocket of time manipulated price to form an SMT and then expand to that draw on liquidity. So I have marked out that 1050 macro to 1110. So 1110. Now what do we see? We see a retracement. So we have a retracement macro, right? And then we get a continuation. Now what time does this continuation happen? 11:50 starts right here. And as you see, we start that expansion right before the macro. And then the macro finishes by taking that draw on liquidity. So this retracement macro, and then we start the expansion to that draw on liquidity. And then at the close of this macro right here, we hit that draw on liquidity. So I have marked out that macro from 110 to 140. What do we see? A retracement into a fair value gap. Remember, we've already taken the overall draw on liquidity. We have just paired orders above a high. We just had displacement lower. Now we have a fair value gap here. This macro gives us an entry and the start to expand to the draw on liquidity for PM. So PM kill zone has now reversed the entire move of the AM kill zone. So here we are, we have a macro that starts a move to the upside that gives us an entry, and then the entire PM kill zone has a reversed AM's price. So here we are at the final kill zone of the day. What do we see? Accumulation, right? Macros can accumulate. Macros give us a retracement for entry, and macros give us expansions. We want to be a part of the entry, so a pullback to then expand. Those macros we want to be a part of. So this is the only time I'm using price, are for macros and kill zones. There is some people out there that use it differently, which is totally fine, but I am only focused on these macros and these kill zones. I will not trade after 11:30, but I am also not bound to the macros. The macros just give us an extra confluence to the trade. Like if I'm about to enter a trade, I'll take a look at the clock in the bottom right down here, and let's say I'm entering at 10:40. I'm like, okay, macro is going to open up in 10 minutes. We could expand to this overall draw on liquidity, right? The market's not 100%. It doesn't have to expand there, but it is a nice confluence to have. Let's take a look at one more example for these macros and kill zones. So here we are on the 15-minute chart, and I have the London kill zone marked out. So what time did this down move occur? At 2 o'clock. So as soon as London kill zone opens, we start the move to the downside. Now, when London kill zone ends, what do? We just accumulate. We are just accumulating in this area after London kill zone has finished. Now, I'm not too familiar with London, so this is the only example I'm going to go into. I just know that if you're trading London, I figured I'd throw this kill zone in there to help you know when to trade. So now we are looking at New York. These first two vertical lines are representing the AM kill zone. So right here at 8:30, as soon as we open, we start the move to the downside, right? Remember that usually news is at 8:30. So be aware that when this kill zone opens, there is usually news. So what happens? We get an expansion to the downside, and then we get this retracement higher. Now, what happens in between these two kill zones? We kind of consolidate. We're engineering liquidity, right? These are failure swing highs on the 15-minute chart. So on the lower time frames, we're engineering liquidity. Now, as soon as 1:30, the PM kill zone opens up, what do? We get an expansion to the upside. So we get a reversal of the New York AM session, right? Yes, we did get this retracement and start of a reversal on the AM kill zone, but then we get this pullback, and then PM confirms that we want to start to give a reversal to the AM session. So let's break down this piece of price action and see when and what time these moves occur. Here we are on that chart on the 5-minute now, right here, those 4 lines. Let's get rid of them to clean this up a bit, sorry. Now, what time did these moves start? So here we are, 9:50, right? There is a macro before open, 9:20 to 9:40, but I don't use that because it's right in the middle of open, and if I'm not already in a position by 9:20, I don't enter one. So 10:10, what does this macro do? Pretty much just accumulates, right? And then we get this move higher, and then when does this move occur? So 10:50 to 11:10 is when we get this expansion higher. Pull back to a fair value gap. Notice we create equal highs. What did I say before? Equal highs love to be targeted. So this move starts at the 10:50 macro, and then 11:50 to 12:10 accumulate, and then pretty much all of this is why I don't trade this macro, because pretty much all of lunch is just accumulation. So 11:10 starts a retracement, right? So here's a retracement. What time does it end? As soon as the macro is done. And then we start this move higher, and then we hit that overall draw on liquidity, which was up here. So for the first macro, pretty much just accumulation. Now, if you're on the 1-minute chart, you can find setups in here. All right, I figured I'd just bring us down to the 1-minute chart. What happens? We get this move lower, expansion higher, consolidate right after this macro ends. So we get this macro opening at 10:50. What happens? Pullback, expansion higher, consolidate right when this ends. Then we get that move higher. What happens in this macro? Straight accumulation. Once again, that's why I don't like this macro. So here's the start of this new macro at 110. We get that retracement the entire way down, and what happens as soon as it's done? Pair orders beneath a low, then we get this expansion higher to hit that draw on liquidity. So right here is the final macro, pair orders beneath a low, expansion higher, and then close gets a nice move higher. So this is all I'm doing with time. I know some people use it differently, and the only kind of time I'm worried about is using these macros as my confluence and then kill zones, right? I'm not trading out of kill zones, and the only other time I'm focused on is market structure, right? Is market structure ready to go? Is the time aligned for market structure to give us a move higher, right? Pair orders beneath this low, expansion higher. It looks like we are ready to go to another high, right? That's just an example. I'm only focused on the macros whenever it comes to literal time on the clock. So now that that's out of the way, let's move on to exactly how to put all of this together and how I find my daily bias and how I am trying to catch the daily expansion, right? All of this, I want you to understand, all of this you do not need. All of this put together was to give you an idea of how I trade. That does not mean you need to take everything I do and use it for yourself, right? Take what you like and leave what you don't. Now, all of this is going to make sense whenever I put it together and show you how I form my daily bias. Let's move on to the next section of the trading den.